people think crypto moves because of hype. Some think it's all about Bitcoin halvings. Others believe it's just retail speculation. And almost everyone is looking at crypto the wrong way because crypto isn't just a tech trade. It isn't just a speculative bubble, and it definitely isn't driven by one event every 4 years. Crypto is a macro asset. And once you understand what actually drives macro markets, debt, liquidity, money creation, the entire crypto cycle suddenly starts making sense. And in this video, I'm going to break down and explain why the 4 year classic cycle that we know is now outdated, my opinion about it, and why 2025 feels confusing for many investors, and why the real peak may not come until late 2026. And it's not price predictions, by the way, it is how the system actually works. It's not my prediction, it's not guesses. Most retail investors focus on micro narratives, new coins, new tech, new influencers, short-term charts. But true investors, they zoom out and they focus on the macro elements. They ask, where is money coming from? How much liquidity exists? Where does capital have to go? What is happening? And the markets are actually driven by liquidity, not stories. And crypto, especially Bitcoin, is one of the purest expressions of global liquidity. When liquidity expands, crypto explodes. When liquidity contracts, crypto crashes. This is why crypto feels overreactive. It's not emotional, it's highly sensitive to money flows. And when people think about liquidity, they usually think about money printing, quantitative easing, interest rates. But liquidity is much broader than that. It's about central bank balance sheets, government spending, treasury issuance, and debt rollovers, credit creation, global dollar availability, and so on. And what is happening right now? Governments are drowning in debt, and debt has consequences. When debt levels become too high, governments cannot allow interest rates to stay high. They cannot tolerate recessions. They must inject liquidity to survive. So liquidity is not a choice, it's a necessity. And that is why every tightening cycle eventually breaks something. Every crisis leads back to easier financial conditions, and crypto sits right at the end of this pipeline. And we also have bigger factors like debt, demographics, money. Demographics are slowing. We've got aging populations, we've got lower birth rates, we have slower productivity growth. This means natural economic growth is weaker. Second, government compensate with debt. When growth slows, governments borrow to maintain living standards. Debt goes up, debt never goes down. It always goes up. So this debt forces liquidity creation. And at high debt levels, rates cannot stay high. Central banks must intervene. Money supply expands over time. And this creates long-term currency debasement. And in a world where money loses value because of the currency debasement in the long term, scarce assets win. And that's where Bitcoin and crypto come in. And yes, I know that there are a lot of projects that would not be successful in crypto because it's not regulated. Everyone can create their own coin. There are a lot of scams. But when we speak about Bitcoin itself, we should look at it as a leveraged bet on global liquidity, a call option on monetary debasement. And this is why Bitcoin actually emerged. It outperforms most assets during liquidity expansions, and it underperforms violently during contractions, which is what we are seeing right now. And Bitcoin isn't broken when it crashes. It is doing exactly what a macro liquidity asset is supposed to do. And this is also something very critical. Bitcoin is not driven by the halving alone. The halving matters, of course, but it's a secondary factor. Liquidity decides if the halving works, if the halving cycle plays out. That's all decided by the liquidity factor, which comes first. And there is a lot of debate now about the 4 year cycle, which a lot of people think it's broken, but at the same time we saw massive dump exactly at the time where the 4 year cycle plays out. And why I think this 4 year traditional cycle does not apply anymore, because the debt cycle has changed. After COVID, government issued massive amounts of long dated debt. Debt maturities were extended. Liquidity effects were delayed. And this stretched the cycle. What we saw is not a typical cycle, but a stretched one impacted by the changes that happened during COVID. So instead of a 4 year cycle, we would see an extended, potentially 5 to 5.5 years cycle. And that's why in 2021, the peak came early. The bear market lasted longer. But this cycle feels slower and more confusing. And according to this framework, if we look at it in this way, with liquidity being delayed, with debt maturities being extended, We are not in the late phase of the cycle, but rather we are somewhere in mid-cycle, and this changes everything. And I'm sure that all the retail investors are feeling very, very frustrated and disappointed right now. And even myself, I feel the same way, because we are asking ourselves the questions like, why isn't crypto exploding? We've been waiting for an altcoin season for 2 years now. ETFs launched, but nothing happened. Is the bull market over? Are we going to see that again? The reason why 2025 was very disappointing is because short-term liquidity drain happened, and that was influenced by the treasury rebuilt cash balances. It also happened because the government reduced net spending, and quantitative tightening continued much longer than expected. And crypto always reacts first to this, and it gets hit hardest than everything else. But don't forget that it also recovers hardest and fastest. And this does not invalidate the thesis. It actually strengthens it, and it confirms it. Liquidity contractions delay the upside. They don't cancel it. So that's why I see 2026 being very important, and it would matter to us a lot as crypto investor. So if the liquidity cycle continues as expected, that rollover accelerates, government ease financial conditions in 2026, liquidity expands again, we would see peak liquidity in 2026 and crypto prices will peak again. But that might come mid to late 2026. And again, that's not because of hype, not because of narratives, not because of noise, but because the system requires it. It's not guaranteed, of course. We are mainly speculating here and understanding how the cycle works, but you can see that there are a lot of unexpected events that can impact on crypto, like tariffs, wars, and political tensions. So if we continue the way we are, with, as we said, debt rollover accelerates, government ease financial conditions, liquidity expands again, and so on, we will see a very good 2026. Again, not a guarantee, but it's a probability based on macro mechanics, which are looking very strong right now. And if you're doubting yourself right now, if you're questioning, I would tell you, just stop thinking in days and weeks. Stop obsessing over noise. Stop relying on outdated cycle models. But instead, start watching liquidity. Start understanding that. Start thinking in macro timeframes. Because crypto isn't random. It's not chaos. It's a reflection of broken monetary system. And that's why Bitcoin appeared in the first place. And those who understand that early enough, they will benefit the most. And if you found this video helpful, please don't forget to like, subscribe, and share. It helps a lot and will be greatly appreciated. Thanks for watching. I'll see you in the next video.